Good day, everyone, and whether you're listening or you're viewing, a special welcome to this AJ Financial feature in which we have a regular look at global and local investing. Today, this is somewhat different, but as ever, we're joined by the founder of AJ Financial Planning, Alex Jamieson, so you can see what he looks like. Welcome, mate.
Thanks, Greg. Great to be here.
Yeah, well, this is very different. This is a different format. Why so?
They've introduced some new education standards with financial planning, and I've had to go back and do some study, my master's degree. And whilst I was studying, I was reflecting and thinking about this notion around that, you know, when you digest information, sometimes people are more auditory, some people more visual. So I'm hoping today we'll get a little bit of both, and it'll be interesting to see the feedback from it.
Okay, so we're fast approaching the 30th of June. Do you have any advice for investors about what they should do before the end of the financial year?
Definitely, I think so. So someone that's sort of sitting there thinking, I need some tax breaks, maybe their income's a little high. Traditionally, they might have gone off and bought the laptop or the briefcase or the new car. Do something a little bit more productive with the money. If you're sitting under the 25,000 cap, which includes what work puts in, certainly put a super contribution in. The rules have changed now. You can do it as what we call a personal deductible contribution. And basically, you get an immediate tax deduction. Far better than the laptop that's going to depreciate over the next 12 months. Your super hopefully will go up over the next 12 months. The other things as well, someone that's maybe on a more modest income. So if you're earning around $35,000 a year, you can make a straight 50% return on your money if you're working. So put $1,000 in, the co-contribution's still bouncing around. Over the barbecue, you can tell your mates how you made a 50% return on your money. And that's worthwhile doing if you're more on a modest income. And then certainly for the pensioners as well. If you're sort of looking at your super accounts and you've found that one member, if you're in a couple, one member's got a huge super balance and the other member may have a lower one, think about the spouse split. There's no point having one member with this massive super account. Certainly the government is definitely going to make some changes in super in the future. And I guess sort of protecting yourself a little bit around that makes some sense.
Okay. Now, there are some changes with income stream options and Centrelink, I believe.
Y2K, we're back there again, Greg. These things are really interesting. I say there's nothing new within super, and this one is the same. So back in early 2000, you had the ability where you could put your money into an annuity. And Centrelink, for the age pension test, they basically gave you a 50% exemption. So if we sort of give you an example, I put $100,000 into an annuity. Centrelink only says for the asset test, we're only going to, say that you've got 50,000 in it. And so basically, someone that's fairly close to the asset test limits for the age pension, this can be a useful tool. So instead of having to go off and spend it on that expensive cruise or the new car to try and get you under those limits, the cars were never that great, but the cruises were often very popular. This could be possibly another way where you could put some money in as an investment, still get the exemption. There's a whole lot of rules and regulations around it. The amount that you can claim as the exemption amount changes a little bit. So I definitely wouldn't be jumping in trying to do that one on your own. You'd certainly want to see a financial planner for that one.
So you said you've been doing a master's. Have you found that's been helpful?
Yeah, it's been fascinating, actually. It's what I find really interesting, Greg, is the way that I studied, which is going back a couple of decades now. If you walked into a university today, everyone would be sitting there with their laptops and using laptops. Me, I'm studying for my exam. I've got the pen and paper out like I did way back then. So it's really interesting, the behavioural side of things. And obviously you learn a lot along the way too.
Now, Ben Crowe from your staff has just come back from London, where he attended the annual CFA conference. Now, we know he goes to different conferences each year. Interesting speakers this time?
Definitely. With Brexit sort of coming up with that deadline, we thought we needed to get some boots on the ground. And so we put Ben on a plane over to, I guess, really hear what was going to go on with Brexit and what was sort of the word on the street, and also try and get some inside information on it as well. So certainly from that event, we got some really great information about Brexit and incorporating that into our modelling at the moment. He's only just sort of recently come back within the last sort of few weeks. So, it was a worthwhile trip for him.
I heard about Laurie Santos from the Yale University. I believe she holds the record for the most popular class ever taught in its 300-year history. She spoke about happiness. Can you tell me a bit more about that? Sounds good.
Yeah, it does. I think it also says a lot about society and where we're at the moment and some of the things that they're struggling with at present. I was really amazed that it was so well received that as a session. Some of the stats, so she's done a heap of work around happiness with student bodies, and some of the studies she found, the numbers are a bit confronting, to be honest with you, Greg. Like, we've seen figures as high as sort of 40% of students really suffering from ranging of depression. And then in another body of work, 60% of students feeling anxious, or so anxious that they couldn't actually function. And so I think, if anything, it raises a lot of questions around why is this happening? And is it new, or is it just the analysis is getting more accurate with it?
Well, talking about happiness, what were her insights into that?
You know, I think it's an interesting concept for me that I've been fascinated with it for quite some time, pretty much ever since I've been in the industry, to be honest. And it comes around this equation, because I'm a financial planner, it always comes back to equations. But as an equation,
figures.
Yeah,
go on.
The equation that I guess is being challenged is the one which is happiness equals money. And so particularly from media, whether it's the most successful business person has to be the one that's amassed the most amount of money as portrayed by the media. Now, I've got some questions around that. Or the most successful person in life is the one that's, got the most lavish lifestyle. And I think this is probably why that course is so interesting. So she basically sort of said, and there is, the equation does work to some level, and I'll explain from sort of some of the academic studies we've seen. If you're sort of from 0 to 75,000 US, the mostly US studies, the formula does have a bearing in that you are able to provide more, better healthcare for yourself. Possibly, you're able to address your basic sort of needs with living. Maslow's hierarchy of needs.
Yeah.
Your bottom sort of standard things. The problem is the tires start slipping after 75, and so quite often we'll be chatting to people and saying to them, what are you trying to achieve and all those types of things. And quite often for a lot of people, it's that somewhere deep in the back of their mind, they have this little voice that says to them quite regularly or regularly enough, if I could just earn X, my life will be Y. And that's the voice. And so when we find it actually from the academic studies, when we find what that formula again, money equals happiness, we find after that 75,000 a year crossover point, the formula starts to break down. And what the findings actually come back to is stuff that money can't buy, things like social interactions and, how you're interacting with your community and others.
Okay. Well, philanthropy, America's much more philanthropic than Australia, so I'm told, in terms of the numbers that they give. Don't you get as much pleasure from giving as earning? Isn't there an equation there?
Definitely. You actually find that if you're giving, you get a better upside on happiness, feel better than actually doing it for yourself. And so certainly there's quite a few of those behavioural traits. And I think that's probably why that course may be so popular, especially for that, that stage of life. It's trying to unwrap the puzzle. I don't know if it'll ever be totally unwrapped, but it's certainly the questions being raised are interesting, that's for sure.
Okay, Daniel Pink, he's a best-selling authority on social science. What were some of his comments?
Yeah, it's interesting. So he's done a bunch of work around social media, and we've sort of chatted about this, Greg, over the years about social media, how it's influencing things from an investment perspective. And so he was studying a huge body of tweets and Facebook posts and the like. And what he found was generally in the morning, people are a little bit more upbeat. By about 3 o'clock, which is sort of that energy drop where people race off and get the chocolate bar or whatever to sort of give them the boost, they find the post can be slightly a bit more negative. And then from 5 p.m. onwards, they found that they're a little bit more positive again.
Does this flow on to earnings calls?
There's always a way to make money, Greg, and absolutely, that's probably why the study was done, to be honest, they found that mispricing of securities, which are shares, actually were more often mispriced during the afternoon session when they made the announcement. And people were a bit more angry about announcements possibly that weren't quite as bad possibly as they were. So they probably should have got the chocolate bar before the 3 o'clock.
Yes. Yes. I was really interested when I saw the stuff from Mark Yusko when he mentioned Africa. I mean, the continent with the most countries. But it sounded to me very interesting. Can you tell us something from his presentation?
It's pretty mind-boggling. So we sort of often think quite commonly about China, population base there. India always pops up as well, but Africa's the fastest growing population. I think
in the world?
In the world, yeah. One of the stats is something, I think it's about 16% of the global population is expected to get as high as 39%, which is just like, oh my gosh, really? I think collectively, though, when we sort of look at it, though, particularly that population, to me, it kind of feels a bit like Europe. And what I mean by that is it's not China where it's just one nation. You've mentioned as well the number of countries that make up the land continent. Trying to get them all on the same page, oh my.
It's so different. And the fact is that so many of the adult males either died through AIDS or were killed in the rebellions and things. So you've got a huge number of younger people coming up. So that will be very interesting demographic.
Definitely. The other thing that's staggering too is I think it's something like 40% of the world don't have a bank account. And for us here in Australia, we sort of think everyone's got a bank account and internet and a mobile phone as well. But to sort of think, 40% of the population doesn't even have a bank account. What sort of opportunities are there? I guess if you put your investment hat on, it's quite interesting. I think there's some of the puzzles that people are sort of looking at. When we think about Africa, though, we really do see it as a puzzle. It's not an easy one, and we've heard people talk from the Congo Stock Exchange right through to other ideas. So it's not an area that we haven't explored. It's just every time I go in, I just think, oh my goodness me.
It's a bit of a way. Look, it sounds like it was a really interesting conference. Let's go back to the wider thing. Do you have any takes on the broader markets at the moment?
Yeah, so we've certainly seen some interesting things. One of the speakers, Mark, that you mentioned before, he gave an interesting piece of analysis. And so he was sort of the viewpoint, whether it's right or wrong, that Japan's sort of leading the way a little bit in terms of what to expect economically with interest rates, for example. So he sort of made the view that Japan's about a decade in front of Europe, and then also about 11 years in front of the US. So
what about in front of Australia?
Well, Australia's heading the same way. Interestingly, with our interest rates at the moment, they're pricing in 2 interest rate cuts. So we just recently have had an interest rate cut for the RBA. They've said, you know what, we're doing one, and they did a 25-point interest rate cut. The market's pricing in another one in about July, August this year. So another cut, and then a third one that's going to happen next year potentially.
Okay, so I was going to ask you about that. So you think there's going to be 3, another 2 coming up?
Another 2 potentially is what's being priced in the market.
Wow.
I think what it does though, Greg, is it starts to distort markets a little bit. So if you're sitting there and you've got your money in a term deposit and the inflation rate is higher than what you're getting on that money, you're now going to be pushed to make some pretty hard decisions. And we've seen those decisions made in the US, we've seen those decisions made in Europe, and Australia's now facing some of those. So the investors are going to have to say, there's going to be a race on yield in the next 12 to 18 months. And so we sort of feel that that's going to distort markets a little bit as a result. And a lot of those areas in the market at the moment, or what you could have, and we've already seen it shift a little bit, what you could have got where you used to go and get interest rates, won't be there in the next 2 years, I believe.
Okay. Well, that's been a really interesting session. Is there anything else you want to add?
I think it's also just, we're sort of looking from the overall market perspective, just a general sense of caution. If the RBA is dropping interest rates, they're doing it for a particular reason. And I think one of the questions we have, particularly at the moment, is around, okay, we're not in a recession at the moment. They're sitting at, I think, 1.25% as an interest rate cut. The last two recessions we had, they did 6% as total interest rate cuts. So they chewed through a lot. We've only got 1.25. So, and they're giving them away at the moment. I just wonder what's going to happen. At some point, we'll see a recession. It's just a matter of time. We don't see it, in the next 6 months or anything, but certainly at some point in the future there will be. If they fire off all their bullets and they're sort of sitting in the trenches going, okay, what now, guys? The really crazy statement of QE does start to be on the table like the US did. And certainly if QE happens, that is going to change the landscape dramatically for asset prices. And so I think as an investor at the moment, certainly as we get to these really low levels, the firepower is going to be reduced. And if there's any murmuring around QE, you want to be speaking fairly quickly with your financial planner at that stage.
Wow. As I think I've said to you before, life in your field is never dull.
Yes,
really.
Definitely.
Thanks for joining us today.
Thanks, Greg. Great to be here.
So that's all from this special feature, from this AJ financial feature. But I leave you with a little philosophy. Well, it was from a philosopher. We're not sure who said it. A smart person makes a mistake, learns from it, doesn't do it again. A wise person uses that smart person to make sure they never make the mistake in the first place. Yeah, well, I wish. With that, thank you so much for joining us on this AJ Financial feature. I'm Greg Ross, and until next time, I wish you all the very best in your financial endeavours.